Mutual funds remain one of the most popular investment options, offering diversification, professional management, and accessibility for investors. However, market trends, economic conditions, and evolving investor preferences continue to shape the mutual fund industry. Let's take a closer look at the current state of mutual funds, key trends, and what investors should consider. 1. Market performance and trends. The mutual fund market is heavily influenced by economic cycles, interest rates, and stock market performance. Over the past year, mutual funds have experienced fluctuations due to inflation, Federal Reserve policies, and global economic uncertainty. Equity mutual funds have seen mixed results as major stock indexes recover from past downturns. Bond funds have gained attention as interest rates stabilize, providing safer returns for conservative investors. Sector-focused funds, such as technology and healthcare, have seen growth due to innovation and changing consumer demand. Despite volatility, mutual funds remain a preferred choice for long-term investors looking to build wealth over time. 2. Shift toward low-cost and passive investing. Investors are increasingly moving away from actively managed funds in favor of passive index funds and ETFs due to their lower fees and consistent returns. While actively managed mutual funds struggle to outperform the market, index-based mutual funds offer similar diversification with fewer costs. The rise of exchange-traded funds, ETFs, has put pressure on traditional mutual funds to lower fees and improve transparency. Many investors are choosing target-date funds and low-cost index funds for retirement planning. Some fund managers are adopting hybrid strategies, blending active management with passive index tracking to enhance returns. 3. Impact of rising interest rates and inflation. Economic conditions play a major role in mutual fund performance. Rising interest rates and inflation have shifted investment strategies. Growth-oriented mutual funds, focused on tech and high-growth stocks, have faced challenges due to higher borrowing costs. Dividend and value funds have gained popularity as investors seek stability and income-generating assets. Bond mutual funds, particularly short-term bonds, have become attractive as interest rates stabilize. 4. The growing role of ESG funds. Environmental, social, and governance (ESG) investing has gained significant momentum. Investors are increasingly prioritizing funds that align with sustainable and ethical values. Many mutual fund companies are launching ESG-focused funds to meet demand. Regulations and reporting requirements are increasing transparency in ESG investing. Despite growth, ESG funds have faced scrutiny over performance and impact measurement. 5. Future outlook for mutual funds. As the financial landscape evolves, mutual funds will continue adapting to new trends. Key factors shaping the future include fee reductions and competition from ETFs and robo-advisors. Integration of artificial intelligence and data analytics to improve fund management. More personalized investment options through fractional shares and tailored fund portfolios. Regulatory changes that could impact fund structures and transparency. Mutual funds remain a strong option for investors looking for diversification, professional management, and long-term growth. However, the market is shifting toward low-cost, passive investing, ESG considerations, and sector-specific funds. Whether you're a conservative investor seeking stability or a growth-focused investor looking for high returns, understanding the current mutual fund landscape can help you make informed decisions.